The banks just declared war on Bitcoin, and the world's largest Bitcoin exchange just joined them. Before you think I'm exaggerating, let's listen into this clip, and then I'm going to dive into why I think Brian Armstrong and Coinbase actually has alternative motives and is actually trying to suppress the growth of Bitcoin for their own profit. First, let's get into what Brian Armstrong had to say.
Coin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. I mean, these are the same banks that, debanked him and his family, right? And they want to come in and say that Americans should not be able to actually earn more money on their money. They're trying to protect their own profit margins, taking money out of the, pockets of hardworking average Americans and putting it into the coffers of these big banks that are hitting record profits.
So he's pointing to banks as the enemy, but here's where I think a lot of people are missing in this is that he's essentially on the same side, because this is Brian Armstrong, CEO of Coinbase. He tweeted this 48 hours ago about the Senate banking's new bill, and he said that Coinbase can't support it, right? Because he lists all the issues, banning tokenization equities, DeFi prohibitions, killing stablecoin rewards. And he frames it like we are fighting for all Americans for economic freedom. But here's what he's not telling you. This bill would destroy Coinbase's business model, and that's why he's fighting it. He's actually helping the banks kill Bitcoin competition. Let me break it all down to you, because here's what most people don't understand. The Senate Banking Committee is drafting this regulation bill. It is a big deal, but it has nothing to do with Bitcoin. If you go in and read this entire thing right here, it has nothing to do with all of this. And look at who's in this committee, right? It's Senator Cynthia Lummis and Chairman Tim Scott. But this whole committee is not all about, let's say, just Bitcoin, right? Because there's three players in this fight. There's the banks who want to kill Bitcoin and crypto competition, right? They see stablecoins as either something they need to embrace or something that kills their business model. And there's another player, the exchanges like Coinbase, who want to protect their own revenue model. And then the last player in all of this is Bitcoin, actually the actual decentralized money. All of these groups claim to support Bitcoin, but they actually don't care about it, because here's what's wild. Armstrong is framing Coinbase's opposition as defending crypto, but when you actually read what he's fighting, it's about defending Coinbase's bottom line, because Coinbase is all about the stablecoin. It took a major stake in the firm Circle, and it shut down its joint venture as it said, it needs regulatory clarity. But it did take a stake in there, right? The two companies also said it would close down the Center Consortium, a private governance organization for the USDC. But they made all of this and started this in the last couple years before Trump had even come into office. So obviously Coinbase has a major stake in all of this. So first, what is actually in this Senate bill, and why is Brian Armstrong so upset? Let's get back to that, right? Because I think it is very interesting when we look at how he's framing it and how he's breaking it all down, right? We'll say why the banks love certain part of this bill and why they are using regulation to kill this competition. And then lastly, we'll dive into what Armstrong is really fighting for. And there's a quick spoiler for you guys. It's not Bitcoin. It's Coinbase's stablecoin revenue. So lastly, we'll tell you what this all means for Bitcoin, because here's the twist. Bitcoin might actually be fine regardless of what happens to this bill. Let's face it, it will be fine. But at the end of the day, and at the end of this video, you're going to understand why this crypto versus banks is really Coinbase. It's Coinbase versus the banks, and Bitcoin is caught in the crossfire, because there's four main provisions that Armstrong opposes, right? The first is a de facto ban against these tokenized equities. So that's essentially what he is really going after here is, okay, he's saying, well, you can't tokenize those equities. And then the second is the DeFi prohibitions, giving the government unlimited access to your financial records, So this means DeFi platforms would need to collect KYC data and report it to the government, which, essentially is what Coinbase already does. They collect KYC information from you from the start. The third is the erosion of the CFTC's authority, stiffing innovation and making it supervent to the SEC. So what this actually means is that the SEC gets more power over the crypto industry, and the SEC has been way more hostile to crypto than the CFTC. The fourth aspect of this is that it needs to draft amendments to not kill those stablecoin rewards. And let's face it, you guys saw it earlier, right? Coinbase has a major stake in Circle. There's literally two main players here in the stablecoin industry in the United States. It's Tether and it's Circle. Circle has had a head start, and Tether is USAT or USA Tether, because they have not been able to use USDT, which was simply just pushed along towards everybody else who is really desired to have dollars. And for some reason, that USDT didn't meet regulation options or the regulations of the United States. So it wasn't able to conduct a business here, right? So it is very interesting when you break it all down that you just need to follow the money, believe it or not. As Bitcoiners, we have always said you need to follow the money to see the incentives. So what am I doing here? I am following the money and seeing the incentives of Coinbase for this bill, right? This is why that they are utilizing Coinbase's platform to say, okay, there's something wrong with this, right? So then we keep on diving into this tweet, and, on the surface, all of these sound like they're bad for just crypto, right? The DeFi restrictions, government surveillance, the SEC power grab. And sure, they are bad, but let me show you what Armstrong's actually not saying for all of this, right? Because he's mostly talking about stablecoins, and he's pointing about the banks, saying that, hey, Coinbase reaps growing rewards from Circle ties and USDC economics. I mean, that's from JP Morgan, who is a bank. Obviously, JP Morgan is, a little, let's say, would take qualm for all of this. And let's start with this stablecoins rewards ban, because this is the biggest one and why Coinbase is going at them, because Coinbase does have that partnership with Circle, like I said, and like JP Morgan is pointing out here. And USDC is currently the second largest stablecoin after Tether. So Coinbase customers hold USDC. Circle takes that USDC and invests it in short-term treasury bills, and Circle earns the interest on those treasuries, and Circle will then split that revenue with Coinbase. Coinbase has made hundreds of millions of dollars per year from this arrangement in just a couple short years, right? And now that the Senate bill would ban stablecoin rewards, banks are actually happy that this bill would do that. And that's why they're attempting to keep it passing, because you can hold USDC and earn that 4 to 5% yield, or you can hold dollars in the bank account and earn 0.5%, right? So why would anybody essentially keep money in the banks if stablecoins are essentially paying 10x more? So banks want this competition eliminated, folks. This is why they're trying to use regulation to do it. And Armstrong is on the side of stablecoins, obviously, because it pumps his own bag, because this would allow banks to ban their competition. And he is right with this, right? But Coinbase is that competition to banks. It's not Bitcoin. It's Coinbase, right? So Coinbase is making a fortune from all of this. So this is essentially why, Armstrong is fighting these provisions, because he's not fighting for your economic freedom. He's fighting for Coinbase's new revenue stream, and the banks want to kill those stablecoin yields. Coinbase wants to protect them, both fighting for their business interest. And at the end of the day, neither of these guys even care about Bitcoin. So now let's talk about the second thing that they are going after here, because it's not just the USDC, it's the tokenized equities, right? So a lot of people have been talking about tokenized equities for some while. but they're saying, oh, it carries this unique risk, right? Because it's something new to the market. And Brian Armstrong essentially says that this bill has a de facto ban on tokenized equities. But what he actually means is that he couldn't offer a Tesla stock on a blockchain or a tokenized bond or any other traditional securities wrapped in crypto. And the reason why Coinbase cares, because this is their next revenue stream. They want to offer these tokenized stocks, tokenized bonds, and essentially be like Robinhood. You know, that's who they see as this competition here. So it's not just, you know, these tokenized equities essentially looking at it from a let's make a bunch of money and let's promote financial freedom. I don't think that that's the case. I think Coinbase sees all of these things as essentially hurting their business model. So that's why Brian Armstrong is essentially going after this bill and essentially pulling their own money away from it. I mean, it's like Cartman. He's saying, screw you guys, I'm taking my ball and going home. It's essentially what Brian Armstrong is saying here. Like, I want you guys to do exactly what I say, what would be beneficial for my business model. And then we're going to pin it on banks because everybody and their mother hates their bank, right? I mean, there's very few people out there that say, oh, the banking industry is so great. You know, I could hold my money in there. You know, this is the rally cry around the crypto industry during the last run up. I mean, what was Celsius' main marketing? It was literally debank yourself. That's what Alex Mashinsky was saying the entire time. Debank yourself. And that company went from zero to multi-billion-dollar valuation. So it showed that marketing tactic worked, right? So at the end of the day, Brian Armstrong and the greater crypto industry, as much as I hate saying that, they understand this. They point to banks as they're different. So when we keep breaking this down and seeing like where the incentives lie, we're following the money here. It's because Coinbase has actually already announced their intention for this. So this is not conspiracy theories here. Coinbase has lined it out for you guys and said they want to tokenize a new era of finance. They're building infrastructure for global tokenization. They're saying that they're doing all this, and this is on their website. This is not just some random conspiracy theory or anything like that. This is from the horse's mouth, as they say. And so now it means it's even more important to just hold Bitcoin, the asset, and avoid getting into, you know, some of that traditional banking system. Now, if you need an escape, you need some liquidity. Look, honestly, during this bear market, it might be a good time to borrow because, you know, hey, that's obviously not financial advice, but if you think we've hit the bottom or we're pretty damn near close to it, well, your loan to value will decrease as Bitcoin's price increases, and then you'll get a better interest rate. So if you got a lot of Bitcoin and you need some expenses, it might not be the worst time. Obviously not financial advice. I trust Salt Lending with all of this. They have some of the best rates starting at 9.95%. And their term durations at 1, 3, and 5 years. And you could borrow up to 70% LTV. And like I said, if you put in that Bitcoin, your Bitcoin price goes up, well, that LTV will decrease. And thus that rate will decrease as well. And if you use my link down in the show notes, you'll get 50 basis points off when you're borrowing here, folks. So do it quickly because there's going to be some interesting twists and turns with this tokenization bill we got here, right? We've got Liberty saying the good thing is that pro-crypto Republicans have the power to pass this bill. So we have to make sure that none of them have been corrupted by the banks. Exactly. I mean, the banks at the end of the day are the bad guy. But we've got Marty Bent in the chat. How we doing? The legend Martavius Bent in the chat. How's it going? But Sarah is saying the latest Coinbase and banks fiasco switching focus to how stablecoins should be rolled out. Yeah, I mean, at the end of the day, this is their focus, right? It's all about stablecoins, because this is what the reason for the Genius Act essentially being passed is that for the first time in I think my lifetime, we've seen countries start to sell off U.S. debt. We've never had that. The U.S. could be potentially in a debt spiral, but who can pick up the slack and start to purchase some of that debt? Well, that's stablecoins. And if you require stablecoins to back one-to-one with bonds, then the U.S. essentially has an incentive to say, hey, Tether, Circle, you guys, buy as much equities or buy as much of the United States bonds as possible, and we'll let you guys run free. So you guys really need to do that, or really need to pay attention to what is going on here, because, you know, now the White House is kind of getting into bed with all of this, which I think is another interesting twist. And yes, that is the real Marty Bent. He does some great talking heads. He actually went and did a video on this over on his new talking head channel. So you guys should go check that out for sure. But we're going to keep breaking this all down. So make sure you're smoking that like and hitting that subscribe button, because we're going to keep diving into how now the White House is looking at this as well, because they're looking at the DeFi restrictions and this potential SEC power grab, right? And essentially, you know, Trump family is now in Bitcoin and DeFi, for better or for worse, right? They're essentially just really in on the crypto scene. So they're looking at these DeFi restrictions, and the Trump family doesn't like it, because the Trump family is in on it, like I said. And this bill would force DeFi platforms to collect KYC. And for better or for worse, that would be killing the entire point of DeFi, right? But obviously, we all know here, folks, that Bitcoin is the only true decentralized asset. And Armstrong is right to oppose this, because it is genuinely bad. But Coinbase is a centralized exchange, so they already do KYC. They already report everything to the government. So the interesting thing is that the DeFi restrictions hurt Coinbase's competitors opposed to Coinbase. So Coinbase would be fine, and they would actually benefit from this. So it is interesting that they point this out. But I know that Uniswap and all these other crypto tokens, they pay to play. They pay to market on Coinbase. And so if these guys are not able to sell their crypto token on Coinbase, that would hurt them, right? That would hurt their main business model. And then lastly, it's the CFTC versus the SEC, because the CFTC has been way more friendly than the SEC, right? I mean, we had Gary Gensler. Everybody was calling him a hostile guy when it came to Bitcoin. He was essentially the enemy. And sure, you know, maybe the SEC has been negative towards crypto. But then again, it's about crypto and not about Bitcoin specifically. It's about a regulatory environment for crypto companies, right? Not just Bitcoin. So two of Armstrong's complaints, are all about Coinbase's revenues here. Stablecoins and tokenized securities. And two of his complaints are about the industry-wide issues, DeFi restrictions and SEC power. But he's essentially framing like he's the knight in shining armor with this tweet and saying, oh, Coinbase is going to defend crypto. It's all about economic financial freedom. But at the end of the day, it's not, right? So let's ask ourselves then, you know, why would the banks potentially want this bill to pass, if anything, right?
The Senate Banking Committee delaying a vote on legislation.
And why is Brian Armstrong saying that these are the banks, and why are the banks' reasons for passing this bill? Well, it's because the banks have the problem because the stablecoin industry is eating their lunch, right? Stablecoins compete with bank deposits. And so, why hold dollars in like Bank of America when you could earn way more by holding like USDC for 5%? I mean, at the end of the day, that's just good business, right? And Bitcoin and crypto are competing with banks' investment products, right? I mean, this is why we've seen banks start to actually embrace Bitcoin and offer some of this, right? It has taken a while for them to get there, though, and there are rumors behind the scenes saying that at the end of the day, even though banks are, let's say, positive in the news about Bitcoin, they are negative behind the scenes, and they are doing things to try to halt and, let's say, hurt this Bitcoin industry, right? So I think at the end of the day, right? I think liberty or death at the end of the day, right? It's all about your money, right? So, I think when you look at liberty or death, people like, you and many of you guys probably don't care about interest on all of that. And I mean, I agree, right? I think it is a niche thing. And I think this is what Brian Armstrong realizes, is that you need to paint the picture of the enemy. The enemy that he's painting the picture is of these big banks, right? I mean, that's how he's doing it, because he sees banks potentially losing some customers, losing deposits, and losing some revenue. So they won't be competing on merit, and their products will become worse and worse. So instead, they're going to Congress and saying, oh, crypto is dangerous, it's used for crime, and all these different things, right? So now the Senate bill, this is a result of this, because the banks would win because stablecoin competition would be eliminated, DeFi competition would be eliminated, and they keep their deposit monopoly. The SEC would win because there would be more power and bigger justice. And then government surveillance would win because more financial data and less privacy. But the main losers would be the crypto innovation. Yeah. But essentially just competition, right? It would be Coinbase. And at the end of the day, Bitcoin doesn't lose in this because, we've got people like Anthony Scaramucci and others that are essentially just promoting, hey, this is a big, bad bill. And they're all talking about different things. And of course, like Scaramucci has been a Bitcoin advocate. But look at this. All they're talking about is blocking yield. Chinese are issuing yield, so we should be, right? And Scaramucci, he owns Bitcoin companies, right? So it's interesting when you are still following the money of these guys. They're still essentially promoting a lot of these ideas, companies, things that would help their own bags. So Armstrong says this bill is bad for crypto, right? He frames it as an economic attack on freedom. But at the end of the day, it's not about quote unquote crypto, right? Or it's more about Brian Armstrong losing some of his revenue sources. I'm going to keep diving into this, but make sure you guys are liking this, sharing it with everybody, your mother, your brother, and everybody else, because we really need to get people to get their Bitcoin off an exchange. And all this Bitcoin content that I've been cranking out for you guys just around the industry, it seems like the sentiment is down. But this is a real time to learn. So make sure you guys get your Bitcoin off exchanges. I think the easiest place to do that is Trezor. You guys could go to the link in the description. And yes, the Clarity Act is trying to ban self-custody wallets. So before this gets passed, you guys should get your Bitcoin off exchanges as quickly as possible. And to do that, you can go to the link in the show notes, go buy a Trezor. I'm using the Safe 7. So you can go and do that. It has a Bluetooth feature. I travel a bunch, like I said, so it is really easy to connect. And the link in the show notes will help you guys find everything you need. And then, of course, you got to back it up on some metal, folks. Go to cryptosteel.com/greencandle. Use promo code greencandle for 10% off. You can literally back it up and do that. Do it fast because, I mean, at the end of the day, like they're saying in the chat, the Clarity Act might ban self-custody. And you could use Bitcoin to get, or you can use these two tools to get Bitcoin off your exchange, right? And when you keep diving into all of this stuff, right? All of these guys, they're all pointing at yield, right? I mean, these are the big players. This is what they see. How can I make money off of this? I don't know. Is it me? Do I get a bad echo over here? I apologize, guys. I'm not in the shower, guys. I just got, I don't know. It's hard to, I can't show you. I got the camera. It's too far away to reach here. If you guys saw him, if I was reaching and showing you guys this room, we've got windows open. So I'm trying to hopefully, you know, let some things, let the air breathe a little bit. But at the end of the day, right, the things in this bill that do not affect Bitcoin are the stablecoin rewards, right? Because Bitcoin isn't a stablecoin. Tokenized security bans. Bitcoin isn't a security. DeFi restrictions. Bitcoin isn't quote unquote DeFi, right? Bitcoin is its own thing. The things that might affect Bitcoin in this bill are just the SEC versus the CFTC authority, which could mean more SEC enforcement against Bitcoin services and financial surveillance, which could just mean more tracking of Bitcoin transactions through the exchanges. But here's the thing, right? Bitcoin's decentralized. You can buy Bitcoin on Coinbase, sure, but you can also mine it yourself, buy it peer-to-peer, buy it on international exchanges, use the Lightning Network, use non-custodial solutions. Bitcoin doesn't need Coinbase, right? Bitcoin doesn't need the US regulatory environment to be perfect. Coinbase does because it is an SEC publicly traded company. Coinbase does need a friendly regulatory environment, and it does need to be able to offer stablecoin yields and tokenized security. So when Armstrong says this bill would materially worse than the status quo, he's talking about worse for Coinbase, right? He's not talking about worse for Bitcoin. So at the end of the day, right, we need to keep our eye on who these players are and what their potential, let's say, benefits or potential, I guess, motivations are for tweeting things like this, right? Because if you read it closely and he says, we're fighting for all Americans and for economic freedom, crypto needs to be treated on a level playing field with the rest of financial services. This is essentially corporate lobbying language. It went from, we want favorable regulations for our business model to, there's nothing wrong with that, right? I mean, but companies lobby for their interests all the time. So let's not pretend this is some sort of noble fight for freedom at the end of the day, right? It's a fight between the financial middlemen, traditional banks and crypto banks, right? Or these exchanges, these shitcoin casinos. This is not about, you know, Bitcoin whatsoever. It's about Coinbase and their competition. So what happens? What's going to go on with this bill, right? It's a draft at the end of the day. It'll get finalized, potentially pass the full Senate, pass the House, and then get signed by the president. But it's going to take months and maybe even years. And the bill will change a lot along the way. But it's interesting to see Coinbase and some of these guys try to come in and do the political jargon, come in and all that, right? Make sure you guys are sending this one around, hitting that like button for me, and subscribing to this channel. Help pump it. In the bear market, we got to pump out the content. So make sure you guys are helping me. And let me know what you guys think in the comments too. If you guys are enjoying these live streams, what I can do better. I always love to hear the feedback. And thank you guys all for joining in. I'll catch you on the next one.